Welcome back to the channel, guys. I hope you guys had a good week last week. On today's video, we're talking about premium and discount levels in market structure. Premium and discount levels. So we're talking about premium and discount levels. What are discount and what are premium levels? Basically, these are points in the market where execution should be carried out. For the premium levels are levels where we expect to see selling pressure and selling expectations in the market, while discount levels are the levels we expect to see buying opportunities in the market. Yes, there can be bullish opportunities in any point in the market, but we are trying our best to fine-tune our trades to taking the ones that appear in discount levels if we are buying, then we are taking the ones that appear in premium levels if we are selling. Now, how do we measure what premium and discount levels are? We use a tool called Fibonacci retracement. So if you look at this Fibonacci retracement tool, there's a kind of way you set it that you can easily get your premium and discount levels. Basically, it always looks like rainbowish kind of different colors, but let me show you my settings so you can copy it if you need to set your Fibonacci like mine. So this is how it will look like when you want to apply it on your chart. So let me increase my font so you can see it clearly. Now, what do we consider as premium and what do we consider as discount? If you have let me take it to structure kind of setting. If you have market pulling in a bullish trend like this, for example, we consider a leg of a move as an impulse, and that impulsive movement we expect to see a retracement into a discount level for us to take future buys or bullish trades. For example, you can see this is an uptrend kind of scenario where we expect market to continue buying to the upside. What do we expect to do now if we are trying to take trades in the discount zone? In this case, like I said, the discount levels are for bullish trades, buying and longing the market, but the premium zones are for bearish trades. When you are going down, that's selling the market. So you are looking for the market to come back to a premium zone where you can sell. Then in a bullish situation, you are looking for the market to come back to a discount zone where you can buy. Simple. Now, let's just say, for example, this is a market leg, an impulse leg, basically, from this point A to point B. This point A to point B. Now, on this impulse leg, where is the discount and where is the premium zone in this impulse leg? Carry our Fibonacci tool, then we draw it from the point A to point B. This is point A to point B, but I want to extend it further so that I can see clearly what I am doing. So basically, this 50% is the equilibrium zone. This is the midpoint between point A and point B. But considering premium and discount, this lower portion, this low portion is what we call our discount zone. So label this a discount zone. This is a discount zone where we expect to take bullish trades. In a discount zone, this is where we earn for bullish setups. So if you are going to be buying, you are going to be buying if and only if the market comes back into this discount zone. Anywhere in this discount zone, you're looking for bullish opportunities to buy to the upside. So therefore, I don't know, whatever you are trading, maybe you are trading SMC, you are trading retail, anything you are trading. If you apply this, you can as well get more high probable trades that moves in your direction better. So for example, you can find the what we call support and resistance trade inside this place, inside this discount zone. It means it has a higher chance of going in your direction than failing. That is the idea of having this discount and premium zone additions to your confirmation and confluence in setting up your trading. So let's move on to the premium zones now. What are the premium zones? What are premium zones? You look for premium zones when you have bearish trend. This portion here, it is your premium zone actually. But the issue here is this is a bullish trend. So you don't need to take any trading decision off of this premium zone. This is where we hunt for bearish setup. But pay attention. We are not going to take any bearish setup in this setting. For example, we are exposed to this setting on the chart. We can't take any trade from this premium zone. Why? Because if we do, we'll be counter trading, because this is a bullish trend. Taking a trade from here means we are selling in a bullish trend, which is counter trading. So where do we now respect these premium zones? We only respect premium zones when we have a bearish trend. For example, we have this established and we look at this swing low to this swing high, and we look at this swing high to this swing low, and on this impulse leg we are looking for a pullback. Basically, this will still be our discount zone, while the above one will be our premium zone. This is going to be premium zone. But the difference now is that we can only bearish, sorry. We have a discount zone and a premium zone, but in this case, we are only hunting for bearish pullbacks and bearish setups in this premium zone. We can't take a sell here, and we can't take a buy here also. Why? Because this is a downtrend. So in uptrends, we hunt for bullish setups in the discount zone, while in downtrends, we hunt for bearish setups in the premium zone. Like I said, we can't be hunting for a bullish setup in this discount zone here. Why? Because the market is going downward trending. Then we can't be hunting for a bearish setup here. Why? The market is going up. That's just a simple difference between the two market conditions. So let's head to the chart so I can show you how the market performs to this premium and discount zones. Let's say we have this established bullish structure. As you can see, we have a low, we have a high, a higher low, a higher high, a higher low, a higher high. Then we are expecting the what? A higher low for a continuation. Now let's say we are now picking out this point, from this point to this point as our point A and B. So this will basically be point A, while this will be point B. So it means we can draw our Fibonacci premium and discount zone from here to here, from point A to point B. What does that mean? That makes us have our discount zone around here, and our premium zone around here. Like I said, we are not to take any trade in this bullish trend now. We don't have any business with the premium zone. So if you observe, one thing is clear. This trend is what? Heading upward. So it's an uptrend. So we expect to see what? Continuations to the upward direction. It means we need a pullback into this discount zone, then we can start looking for bullish trades in this direction. Now, what happened in the market? Market went back into the discount zone, then started pushing up to continue the trend. So how do we use this to our advantage? Like I said, we know that we should expect a pullback into the discount zone, then a push from there. So what we just need is to look for things like order blocks in that premium, in that discount zone. All we need to do is look for things like order blocks, fair value gap, and basically our whatever strategy you trade, look for it in the discount zone, then you can hop on the trade at that point. For example, you trade order blocks, this would be a very good order block to take a trade from. The stop loss will be under the order block. Then you can target 2R or 3R depending on your risk appetite and risk reward nature. So as you can see, order block traders would have made clean 3R from this setup alone, just by fine-tuning your expectation. You know that this should be a bullish trend. Yes, it should continue going up, but at this point you need to verify if your trade is in the discount or the premium zone, and if it is worthy to tap from there and move to the higher levels. So that is for a bullish example. Let's look for a bearish example that can explain to you guys how that also works. As you can see, this is an established downtrend on Euro USD 4-hour time frame. So let us say, for example, we keep looking and expecting for a trade, and we need the market to give us more lower lows and lower highs so that we can look for our next entry. Obviously, you can see this is a high and this is a low. So it means this will be our new, from here will be our point A, while here will be our point B. So now we have our impulse leg, we have our swing low. This is our impulse leg, and we are expecting to see the market pull back into premium zones so we can take our trades. Now this is going to be the premium zone, and like I told you guys, you don't trade from the discount zone when the market is bearish. The market obviously is bearish, so we should not be looking for a trade from the discount zone. Our business should be, how do we get a trade from the premium zone? So we obviously have to wait for the market to come back into the premium zone and consider all our point of interest in the premium zone. For example, this is an order block here that we can be considering to take our entry from. If the market comes into this premium zone and taps into this order block, you can use confirmation entries, you can use limit entries. In this situation, I rather use the limit entry. Why? Because I can see a defined stop loss point at that point there. So let's see how the market played out if it came back to that zone to give us an entry. So that is obviously what we are talking about. The market pulling back into a point of interest in the premium zone to continue the momentum to the downside. So what we just did is position ourselves to catch that momentum when it comes back into the premium zone. Then we take advantage of it. As you can see, it keeps repeating itself over and over again. You can keep holding partials if you feel you can continue with the trend, but as you can see, it's a very healthy downtrend, so it's nothing to be worried about. So basically, this is a brief breakdown on premium and discount levels on the chart. I hope you guys learned a thing or two from this video. If you have questions, you can leave them down in the comment section. If you want to join my mentorship program, the link is also in the description box. If you want to reach out to me personally, you can also send me a message via my social media platforms. The link is also in the description box. I'll see you guys in the next video. I hope you have a good week this coming week. So